be careful when everybody is very negative. Just be careful that you're potentially going to get some counter trend data to help support that. Here's what you need to know before the bell today. Markets are, as I said, are looking to open lower this morning. Again, not any real news overnight of consequence. The market rallied very nicely yesterday, coming right off the 200-day moving average, holding that support level. We've held the 200-day moving average for 2 days in a row now, so we're going to retest that again today. Now, again, as we talked about before, be careful with breaks of support. It is possible that over the next couple of days that the market tries to come down, retest the 200-day moving average, breaks that. Be careful with becoming very panicky at that moment, making a lot of big sell decisions, because we've seen breaks to the 200-day moving average several times over the last few years, and those turned out to be buying opportunities, not selling opportunities. And again, not saying that this time is different, not saying that this time is going to, cause a much bigger decline in the market. That could happen, right? There's certainly a lot of concerns out there right now, but as we saw yesterday, the economic data, a lot of concerns over the last few days about the GDP now showing such a negative read. That is going to improve rather sharply here over the next couple of days at the next print when the GDP now number comes out, because we had very decently improving ISM Services and Manufacturing data. So that's going to feed into that report and show an improvement in that economic expectation of the report. So again, we'll probably see some better economic report. We have the employment report out on Friday, likely going to be better than expected. That's going to feed into that data as well. So again, be careful when everybody is very negative. Just be careful that you're potentially going to get some counter trend data to help support that. But again, markets here very oversold. Again, as we talked about sentiment-wise, sentiment is just about as negative as it can be at this point in terms of investor sentiment. Positioning sentiment is also very weak right now. So you've had a lot of selling, a lot of deleveraging in portfolios. And again, so once you've had all this selling, we're now starting to find out where buyers are living. And we've talked about before that sellers live higher, buyers live lower. And that's where we're currently getting to right now. Now, I've got a very long chart of the S&P 500 because we've got to go all the way back to November of 2023 for the last retest of the 200-day moving average. And this is a little bit hard to see for you this morning. I apologize because we needed a long data chart for this. But we had to go back to 2023. We broke the 200-day moving average right there. Markets were extremely oversold in terms of both momentum as well as relative strength. That was the bottom of the market in 2023. And then, of course, we had that rally that started from there. Going all the way through 2024 last year. But previous and points worth noting is that every time markets have been this oversold on both the momentum and a relative strength basis, this has been near-term bottoms of markets. So again, I'm not saying that this market can't go lower. It certainly can, but the trend of the market remains clearly positive right now. You're extremely oversold here. So again, I would be a little bit reticent about selling a lot of positions, becoming overly bearish in the markets right now. Okay, that's what you need to know before the bell this morning.